Good evening, everyone, and welcome to Home Buyers Connect, a monthly educational initiative brought to you by India's first home down payment assistance program, that is HomeCapital. At HomeCapital, we believe in helping others accelerate their home buying process, while we also have our own product in this space. The primary motive of this webinar is to educate our home buyers and smoothen out the entire journey for them. We all know that home is one of the mankind's primary needs. Still, it's a complex and time consuming process, whereas it also remains to be the most expensive proposition. So, in this webinar series by Home Capital, every month experts from industries explain and help us on how we can ease up the home buying process. What are the finance options available? How we can save up on our finances? What is the exact process in terms of home loans, down payments, stamp duty, and registration, etc.? But we do realize that the number of resources available out there are generic or not. And to bridge the gap, let me introduce today's guest speaker, Mr. Pankaj Saraogi. Mr. Pankaj Saraogi is CA, who has also done LLB and MCOM. He has acquired diploma in international taxation ICAI and diploma in systems audit ICAI CS final. He has a vast experience in direct tax laws and ICAI member since 2007. Mr. Pankaj has obtained 10th rank in CA final. He had the highest marks in direct tax laws in NIRC, ICAI. He has a graduation degree from SRCC and holds a diploma in international taxation. Mr. Pankaj has been special invitee of Direct Tax Committee of ICAI for the year 2018 and 19. He has also been an eminent speaker in seminars, workshops, and trainings on direct taxes organized by ICAI, PSUs, and corporates. Hello, sir. Welcome to our webinar by Home Capital. It's such a pleasure to have you here.
Yeah, hi Vaishnavi. Thanks for the invitation and thanks for this particular platform.
Yeah. So, since it's March and it's known as a month of taxes and budgets, let's shed some light on maximizing the home loan tax benefits. To start with, can you provide a list of benefits on home loans under income tax laws?
Yeah, definitely there are a lot of benefits if we talk about under the income tax law. But before that, I would like to test the mic that is working or not. 1, 2, 4. Oh, where is the 3? I think that has been deducted as a TDS. So that what is the aspect if we talk about the home loan benefits or whatever, whenever we think about the income tax law, the first and foremost thing we have in mind is that is tax deducted at source. But today, TDS is not the aspect and it does not affect us as such if we talk about the home loan benefits. Now, regarding the home loan, first of all, we get the home loan at a subsidized interest rates because of the government policies, each and everything. And that's why it is very lucrative. But income tax makes it more. The thing is that if we are able to get the benefit of the interest cost as an expense or as an, you can say, outflow out of the net inflows, and the balance inflow is taxable under the income tax law, in that case, obviously, our interest cost reduces to a great extent. And friends, if we talk about the home loans or interest cost on such home loans, the hell lot of tax plannings are available. Obviously, the tax planning cannot be, you can say, a general in nature. It is very specific to the facts of a particular case. Like recently, I faced a particular situation when someone approached me regarding the investment plans, each and everything. And when we went through all the facts of his particular case for the upcoming future, we found a very good tax planning. And friends, in percentage terms, if I talk about from the gross receipts, we are able to save approximate 5 to 6% taxes. And 5 to 6% not of the taxes. The 5 to 6% I'm talking in terms of the gross receipts, the gross income he's earning. That means if we say that effectively tax rate is 30%, he ultimately, because of that tax planning, paid approximate 24 or 25% of taxes instead of 30%. And I think that's a huge savings if we talk about. So friends, we are going to discuss the home loan benefits through a particular example, in my view, that will be much better. Taking some imaginary figures regarding a particular person, obviously that can be modified, can be suited to each and every person depending upon the facts of the case. So let me share the screen a particular tax planning example by which we will gonna discuss each and every aspect of the home loan benefits available under the income tax law. Let me share. This is the particular Excel sheet. Allow. Okay, Vaishnavi, I think this is visible to you, this particular Excel sheet.
Yes, sir.
Okay, thank you, Vaishnavi, for the confirmation. So, friends, this is a basic structure which was provided by a particular, you can say, assessee to us, like you only. Having basically income and red salaries, a brief breakup round of figures. Basic salary of 22 lakhs, HRA generally 50% or 40% of the basic salary, that is 11 lakh rupees. And he said that I'm going to reside in my own house. Therefore, there will be no HRA exemption. That means full HRA is going to be taxable. And other emoluments which are taxable, I'm assuming maybe special allowance or bonus or whatever, 32 lakhs. So he's having a CTC kind of approximate rupees 65 lakhs. And he says that I'm liable to pay professional tax of rupees 2,500, standard deduction 50,000. We all know that particular aspects. We all know ki salary we have standard deduction of 50,000. I'm assuming that person is going through the old taxation regime. New taxation regime we are going to discuss separately. So his income under salaries, or you can say taxable salaries, comes to approximate 64.47 lakhs. Now he said that I'm already having a house property which is already let out, and I'm getting 40,000 per month rent. Okay, that is 4,80,000. Income tax, we all know that provides us 30% flat deduction from the gross rent. That we all know. So that is a 30%. He said that I have not borrowed any money for this particular property. Therefore, there is no deduction in respect of interest on borrowed capital. That means taxable rent is 3.36 lakhs. Now, he said that we are going to invest a huge amount in a property, which partly will be funded from my salary and balance amount will be from the loan. And he says that approximate cost of the property is going to be rupees 5 CR, out of which we can assume that approximate, you can say, borrowed funds will be approximate 2 or 2.5 crores or maybe 4 crores, whatever. And we are planning to have our own property. We are going to reside in that property. We have already seen, but before that, we want to finalize with you each and everything. So there will be a self-occupied property for which he has borrowed the money, planning to borrow the money, and for which there will be approximate interest expense, yearly interest expense will be rupees 15 lakh. But we all know that, friends, I think you must be having idea that in case of self-occupied property, if you are owning a property and residing yourself, you are not earning any rent, then interest amount can be claimed as an expense to the extent of rupees 2 lakh only. To the extent of rupees 2 lakh and not more than that. Now, this 2 lakh will be adjusted from your other incomes. Other incomes may be your rent income, other incomes may be your salary income. You can adjust this particular 2 lakh. In this particular example, we made it set off with the that let out property 3.3 lakh. The balance income, rent income is taxable is 1.36 lakh. In case this person did not have any other property, this 2 lakh would have been set off with 64.47 lakh. Now, this is the gross total income. I'm assuming he is not making any kind of investments in capital market or whatever. Then we have section 80C deductions, we all know. Now he is having a good salary. Obviously, provident fund contribution will be there, but this can be claimed as deduction, maximum 1.5 lakh. Obviously, he is planning to repay the loan. Friends, we all know that one benefit is available, that loan repayment principal can also be claimed as deduction as part of 80C, but 80C is maximum rupees 1.5 lakhs. That's all. Now, this deduction is allowed. Now, what is the total income, which is the taxable income? That is 64.33 lakhs. Now, we need to calculate tax on this particular 64.33 lakh. That comes to rupees 17.42 lakhs. Now, income is more than 50 lakhs, 10% surcharge is there, then cess is there. So, he is liable to pay 19.93 lakhs tax for this particular aspect. And that guy visited us with this particular aspect, this particular calculation, facts. He said that my calculation is perfect. I'm going to submit this calculation with the employer for the purpose of TDS. I thought that you have made the perfect calculations. You know the income tax law. And obviously, in the near future, the knowledge you are getting, in the near future, there will be no requirement of professionals at all for the at least for the purpose of income tax. Now, friends, when we went through the facts, I simply asked him a question that why you want to buy a property, and even if you want to buy a property, then why you want to that reside in that property? You only why you do not want to let out? He simply said that we must have a property that is mindset our own house, and we are living in our own house. Manaka, what is this that safety you are ensuring? That future capital appreciations, it is quite possible that property might rise from 5 cr to 7 cr or 8 cr. We are not required to pay any kind of rent and all sort of aspects. Okay. Now I simply said him, if I make a tax planning in a such a way that you are having same kind of flows with you, that cash flows, like in this particular aspect, if I talk about what is the cash flow, this 65 lakh, then this 4 lakh 80,000, and he has to pay 15 lakh rupees interest. So this is the, you can say, inflow and outflow in respect of that financial aspects. I told him if I am able to manage the same inflows, same outflows, that includes same net inflows, but with reduced tax liability, and that too within the bracket or under the umbrella of the income tax law, will you be happy? He said yes. Now, friends, see the tax planning we provided, and that is possible. And after that, we are going to discuss in detail the home loan benefits under the income tax law, the fine aspects of that. This is the broader aspect. Friends, we simply advised him that you purchase a property somewhere else where you do not want to reside. But for all aspects, you think that property to be comparable with the property that you are planning to buy. Like, for example, I have a plan to buy a property in township A. Then we advised him that go for that, purchase a property in township B somewhere else, having approximate similar rates, similar returns, similar rent, and similar possibility of the capital appreciation. He said, okay, no issues in that. I will do that. Now, what will be the tax benefit? I said him that you go for letting out that property on rent of township B. How much rent do you expect? He said rupees 1 lakh rupees per month. Okay. Now, if I tell you to have the property in township A on rent only and start living in that, what amount of rent you need to pay? He said that 1 lakh rupees per month. Approximate same. I'm talking about the approximations. Now, what will be the impact on your cash flows? He said nothing. That I will earn rupees 1 lakh rupees per month rent, and I will pay that 1 lakh rupees to my landlord. And there will be no impact over the cash flows because interest liability will be the same. That I need to pay rupees 15 lakh interest because I'm going to buy that property for the similar amount. Okay. Then I given him another option. That instead of buying a rupees 5 cr property, why don't you buy two properties having cost of rupees 2.5 cr each? That divide that particular property in two parts: home loans, the down payment, and two tenants and two rents, each and everything. He said, what is the benefit in that particular aspect? I said that there is a benefit that you have liquidity in your hand. In case if you require some funds in your hand, some finance for any particular planning relation to your family or something else, you can sell one of the property. Instead of selling the single property of rupees 5 cr, you can sell the property of 2.5 cr and get the funds in your hand, and second property will continue with you. And in any case, you can sell the two properties at any point of time. That's your choice. That is also good. But what is the point in that? How will I get the benefit? Why should I take the burden that if I'm letting out the property, I'm living in the rented house? Why should I take the burden? I simply said that let's check out the recalculations of your income tax. Let me share again, friends, that particular sheet. Now check out this particular calculation. Same basic salary, same HRA. Now, since he's residing in a, you can say that on rent, he need to pay the rent, he will get HRA exemption. Now, as per income tax law, what are the HRA exemption calculations? I'm assuming he's paying 1 lakh rupees per month, that is 12 lakh rupees per annum. Now, what is the limit that HRA will be exempt? Is the lower of these three. Lower of these three. That is actual HRA received, rent paid minus 10% of salary, that is 9,80,000, or 50% of salary, depending upon the city you are living in. If you are living in the 4 metro cities, it is 50% of salary. If you are living in any other city other than these 4 metro cities, then it is 40% of salary. Minimum of 3. That is 9,80,000. In that case, your HRA to the extent of 9,80,000 will be exempt. Your taxable HRA will be 1.2 lakh. Other incomes in relation to salary, 32 lakh. Now taxable salary comes to 54.67 lakh. Now at this stage, you will say that although salary income has been reduced, taxable salary, actual salary is your 65 lakhs. But on the other way around, my rent income has been increased. Now check out the rent income. First property, same calculations. I think you will appreciate, friends. Now second property, 1 lakh rupees per month, that is 12 lakh rupees. Standard deduction 30% is allowed, that is 3,60,000. Now interest on borrowed capital. Friends, in case of let out property, 100% of interest cost is allowed as an expense, as deduction from your rent. Friends, if out of 5 CR, if 4 CR is from home loans, and I'm assuming that 8% interest rate is there, friends, it comes to 32 lakhs. 4 crore, 8%, 10% is 40 lakhs. Yes, 32 lakhs. Even I have taken that particular amount on the lower side, that is 15 lakh rupees, and this will be 100% deducted from this 12 lakh. That means from the income tax perspective, you are earning negative income of 6.6 lakh. Or in simple terms, you are incurring the loss from the perspective of income tax law. But this 12 lakh which you are earning, you are paying to the landlord. That means there will be no inflow, no outflow, vis-a-vis the first tax planning. Now this negative income of 6.6 lakh will be adjusted with 3.36 lakh. That means your rent income will be 0, or even I will say the negative 3.24. Now friend, this negative 3.24 can be set off with your other incomes, but maximum 2 lakh. So out of this 3.24 negative income, I have adjusted 2 lakh with other incomes, resulting thereby my gross total income and ultimately total income to 51 lakh only. 51 lakh, resulting into my tax liability of 15.41 lakh. Friends, besides tax saving, this 1.24 lakh will be carried forward to next 8 years. Carry forward means that you can claim this negative, this loss of 1.24 lakh in next 8 years from your rent incomes. In case in future years, if you have positive rent incomes, then you can set off, you can claim this particular 1.24 lakh from those incomes. That means your tax saving is not restricted to this amount, but even more than that. And if you are having housing loan for 15 years, and that is quite normal in my view, friend, this tax planning will hold good for next 15 years. Now see the how much tax savings you are getting. Friends, in computation 1, you have tax liability of 19.93 lakhs. Now you have tax liability of 15.41 lakhs, resulting into tax savings of approximate 4.5 lakhs without having any impact on your inflows or outflows. The money at your disposal. Every year, that the benefits I have written. So friends, it depends on the facts of the case. Friends, any of you participants would like to ask anything in this particular regard, in particular aspect, then I'm going to discuss in depth with the fine aspects, how much home loan benefits are available in respect of interest, how much loans benefits are available in respect of principal component, what are the conditions, each and every aspect. Yogendra ji have a query that does any benefit for under construction home loan except stamp duty? Yogendraji, that particular aspect we are going to cover up, no doubt in that. But my another question which I'm coming to mind, that how under construction home loan gives you the benefit of stamp duty. The stamp duty need to be paid to the state government. Now, in case if I'm buying a property upfront for rupees 5 CR, I need to pay stamp duty varying from 6, 7, 8%, whatever is there. That is calculated on 5 CR. Now, I'm booking an under construction property. The possession will be handed over after 3 years. It is quite possible. I need to pay 5 CR to the builder, whether through funded from my own source or from that particular bank loan. I need to pay stamp duty on that 5 CR. So in my view, that there is no benefit of stamp duty. Specifically, I'm talking about Delhi. Maybe state laws may be different in different states. But under construction property benefits, we are going to discuss definitely. Now we have another query from Mr. South Sake. For example, I buy a house on EMI of 30 years. How can I reduce my EMI tenures over the period of years? How can I reduce my EMI tenures? Obviously, by way of prepayment, Mr. South Sake. That you need to prepay the loan, a part of the loan, and you can reduce your EMI tenures. It depends on your funds planning. Okay, let's get back to that. Now coming to the fine tuning in respect of interest benefits under income tax law. Okay, is that visible, Vaishnavi?
Yes, it's visible.
Okay, thank you. Now, friends, first of all, regarding home loan, we are discussing first and foremost aspect, that is interest. In that again comes to two parts. It could be let out property and it could be self-occupied property. Now, first of all, comes to the point what all aspects, or you can say what all costs are covered up as part of interest. It could be pre-EMI interest. It could be like a bank processing charge or any other kind of charges which may be charged by bank from you, possible. Interest which is paid on regular basis with every EMI. All aspects are there. Now coming to this, first of all, this particular processing charge or other charges levied by the bank. Friends, I have seen that we are in a belief that this processing charge or these charges which are levied by the banks are not interest. Friends, I agree with you. Practically, it is not interest. Obviously, it's a processing charge. But when we talk about the income tax law, from friends, from the perspective of income tax law, it is nothing but interest. Under income tax law, the interest word is defined. And it specifically says that it includes any kind of charges which are paid in relation to a debt, is nothing but interest. And we have a settled judgments in this case also, whether that processing charge being levied by the banks or NBFCs is interest or not for the purpose of income tax law. Yes, it is interest. And when it is interest, it forms part of cost of interest, cost of home loan. And in any case, if interest is allowed as a benefit under income tax law, then this processing charge is also allowed as benefit under income tax law. There is no doubt in that. Now coming to the pre-EMI interest. Let's take a simple example that I took loan on 1st of July 2019. And I got possession of the property, or you can say registration of property in my name on 1st of October 2022. In between, we have an end of the financial year on 31st of March 22. That is approximate, you will say 20, 21, 22. That is 2 years and 9 months. This period is 6 months. And after that, you are going to pay regular EMIs. Now, what is pre-EMI interest from the perspective of income tax law? Friend, that must be clear to us. I'm not talking about the practical life. If we talk about the practical life from the perspective of the bank, then up to 1st of October, whatever the interest you have to pay is nothing but pre-EMI interest, but income tax is not so. Income tax simply says the year in which you have received the possession, the pre-EMI interest will be calculated up to the preceding financial year. Like from the perspective of income tax law, this is the line. This interest will be called pre-EMI interest. That means although you have got the possession after 3 years and 3 months from the date of loan, but from the income tax perspective, only 2 years and 9 months interest will be called pre-EMI interest. That is up to 31st of March 22. Now I'm assuming it to be, for the sake of simplicity, 3,30,000. This 6 months interest, 60,000. Now, in this financial year 22-23, there will be a period of 1st of October to 31st of March. Again, 6 months. I'm assuming interest to be 55,000. In financial year 23-24, you need to pay interest for the whole year. I'm assuming it to be 1,10,000. Now, how will you get this particular interest benefit under the income tax law? Friends, if I talk about up to financial year 21-22, no benefit of interest, because you are not into possession of the property, you are not the owner of the property. Now for financial year 22-23, first of all, you will get benefit for regular EMIs. Now from the perspective of income tax law, regular EMI will be for the whole year. That means this will be the interest benefit you will be getting. Irrespective of the date of possession, it may be 1st of October, it may be 10th of October, it may be 11th of November, it may be 10th of March. Even in that case, the whole year interest will be called regular interest from the perspective of income tax law. That means in our example, that will be 1,15,000. You will get benefit for pre-EMI interest also, but that is available over 5 years. That means 3,30,000 divided by 5. That makes it 66,000. The total benefit will be over 1,81,000. For financial year 23-24, it will be regular EMI interest. That is 1,10,000. Pre-EMI interest, that is again 66,000. That makes it 1,76,000. So that is the way the income tax law calculates interest for the purpose of claiming that interest against that rent income you are earning. So this is the way of calculation. This is the way of calculation. Now coming to the aspect that there could be two kind of properties. One is let out, one is self-occupied. Now I am assuming that your interest expense as per income tax law, that is nothing but pre-EMI 1/5 plus regular is equal to 3,20,000 assumed. Now in case of let out property, whatever rent you are earning, you will get 30% deduction flat minus 3,20,000. The full interest is allowed as deduction. But in case of self-occupied property, you can claim this interest to the extent of 2 lakh only. To the extent of 2 lakh. The balance 1,20,000 will not be allowed to you. So that is the foremost difference between let out property and in case of self-occupied property. I hope this is clear to you all. Okay, there is no comments, no issues. Coming back. Friends, another condition for claiming this 2 lakh that you have to keep in mind, that from the year of loan, year of loan, you get the property possession in next 5 years. Like for example, if you are having loan in financial year 1920, then possession must be by 31st of March 25. That after this financial year, you are getting possession within next 5 years. That means you are getting possession, you must get the possession within 5 to 6 years maximum. It could be 6 years also, depend upon the date of loan. Then only you will be able to get 2 lakh benefit of interest. Otherwise, it will be restricted to 30,000 only. So that you have to take care. Friend, it happens that you book a particular flat with a builder, which is under construction. And under the agreement, it is written that possession will be given after 7 years and you go for upfront loan. Friends, I'm really sorry. In that case, self-occupied property, you will get 30,000 deduction of interest only and not 2 lakh rupees. But if yes, if the builder promises that the possession will be given in next 3 years, and in case the delay is because of that builder, not because of you, in that case, that it is settled proposition that you will get the benefit of 2 lakh instead of 30,000, because this is not your mistake. This is a delay because of that particular builder. So from the date of loan, you must check out whether the promised date of delivery by the builder is within the time period of frame of 5 years or not. Otherwise, you will be problem. But this such restriction is not in case of let out property. In case of let out property, construction period could be more than 5 years. Whole of the interest will be allowed as benefit as deduction against your rent income. I hope this particular aspect is clear to you, friends. Anything you would like to ask up to this stage? Otherwise, we will proceed towards the principal amount benefit. Yeah. Okay, Kashif is having query. What are the tax implications if I'm selling a house and purchasing the new house? Kashif, although it is not related to loan, if the time permits, definitely we are going to discuss that particular aspect also. Although there is no loan involvement in this particular aspect, but we are going to discuss if the time permits, no issues in that. And although I personally believe this is a very, really good query that you asked. May we continue, Vaishnavi?
Yes, sir.
Thank you.
I had to ask you that all these benefits which you had just explained, does
Yep.
this come under the new tax regime also?
Vaishnavi, I'm coming to that little bit later on. Just permit me
Okay.
to discuss the principal component first, and then
Yes,
we will come to that particular aspect. The
sure.
appreciable query, whosoever have had that particular query, they were very appreciable.
Okay.
Sorry. Okay. Now, friends, regarding interest, please remember that funds borrowed may be from banks, from NBFCs, from private persons even. Like, for example, if you are borrowing funds from your friends, it is quite possible. And if you are paying interest to your friends, even that interest is also allowed as benefit. Now, coming to the principal component. Friends, principal component, we all know, is allowed as part of 80C, which has maximum cap of 1.5 lakh that you have to take care. It happens generally if you have a good profile, good incomes, then 1.5 lakh limit is nothing. But here is the condition that first of all, the loan must be from banks, NBFCs, or maybe from employer. If you are having funds borrowed from the private persons like your friends or family members, in that case, principal component cannot be claimed as deduction. Now, in case if you are paying any principal before possession, then that is not allowed as deduction as part of 80C. Any principal which is paid after the date of possession is allowed as part of 80C. So that we have to take care. Whatever you are paying, that is being paid after the date of possession only. Now coming to the question of the Vaishnavi, that whether these benefits are available under the new tax regime also. Now coming to that particular Excel files, friends, which I have shared, and let me check out if it is a new tax regime, how it is going to be impacted. How it is going to be impacted. Now this is the revised calculation if I talk about. First of all, let me check out the original calculations. Friends, instead of old regime, I'm now assuming it is a new regime. And from the perspective of assessment year 24-25, for the next year I'm talking about. Okay. Now this will be there. This benefit will not be allowed, but standard deduction is allowed. Friends, standard deduction by this budget has been extended to new tax regime also, but with effect from financial year 23-24, not for the financial year which is going on. Okay. This is allowed. This is allowed. Now, if you are going for new tax regime, friend, this 2 lakh is not allowed. Sorry. In case of new tax regime, you cannot claim interest deduction in case of self-occupied property. Sorry, forgot that interest at all. Now your income will be 67.86. This EPF deduction, sorry, not allowed. 80C is not allowed. This will be your income. Tax will be calculated little bit different. I need to check. I know the tax rates, but I have to put on the formula like 3 lakh, 6 lakh, 9 lakh, 12 lakh, 15 lakh. So this obviously going to change. This will be little bit lesser. This will not be the same amount, 18.48. But there will be surcharge 10%. There will be cess 4%. And this tax liability will be little bit lower than as compared to this calculated 21.14. Now coming to the second calculation, whether these benefits will be available under the new tax regime. Friend, this 980, sorry, no HR exemption. 2500, sorry. Coming to this, okay. Coming to this, okay. Coming to this, okay. But losses carry forward, 3,24,000. Friends, under new tax regime, there could be negative income from rent incomes. But that negative income cannot be set off with your other incomes. The whole negative income will be carry forward. In our example, 3.24 lakh, and it will be set off against your positive rent income in next 8 years. You cannot claim this year at all. This will be your gross total income. 80C benefit, sorry. This will be your income 64.50. This will be your tax liability. Again, subject to that particular aspect that I have not calculated tax liability as per the revised slab rates for the new tax regime. But even if we go by the same slab rate, still what I'm finding out that in the earlier planning, we are liable to pay 21.414, and here we are liable to pay 19.99 lakh. That again, there is a benefit of approximate rupees 1 lakh. Even if I go for the let out property and instead of self-owning, self-occupying my property, I'm letting it out. So little bit pain, obviously you have to take, you have to find out the tenant, you have to go for the agreements. There will be little bit complex tax calculations, but obviously that gives you benefit. Why we are working? Obviously to earn the money. And to earn the money, there are two ways: to actually earn it or to avoid the outflows. Same way. So friends, this benefit is available. Now, what will you say? Although benefit is available, but we are not getting technically benefit of this interest at all. This is being restricted. And friends, this 6.6 lakh I'm getting because I have positive rent income from one of the property of 3.36 lakh. Now you may be having question that in case I'm having only one property, then obviously this whole 6.6 lakh will not be allowed as an expense. It will be carried forward, but for 8 years only. Who have seen the future? Friends, now there is a concept which has gained more clarity from this particular budget 2023. Whether this particular interest, this interest could be added as part of cost of your asset, cost of your property for the future sale. Let me share that particular blank screen to discuss that particular aspect. Okay. Now you acquire a property for rupees 5 CR, or you getting construction. For this purpose, you are paying pre-EMI interest of rupees 70 lakh. Pay kara? This particular aspect is in financial year 1920. Pre-EMI interest 70 lakh. Now from financial year 1920 onwards, you are paying interest every year. 2021 and goes on, like for example up to 3031. Every you are paying the interest, for example 22 lakh, then 21 lakh, and accordingly up to 3031 you have paid the full amount and you have paid interest of rupees 1 lakh. Now loan amount is nil, and assuming this total comes to rupees 1.5 CR, I'm just taking an assumption. Now in financial year 31-32, you are selling out this property for rupees 15 CR. Now from a layman perspective, we will all be happy that 5 CR property is getting sold for 15 CR. We do not want any kind of tax benefit. This is like tremendous, amazing, very good appreciation. But friends, if I can save the taxes, that is also good. Like out of this 15 CR, obviously this 5 CR will be subtracted, this cost of asset. And we all know that in case of long term, if you are holding this property for more than 2 years, then inflation benefits are also provided in terms of indexation. So this 5 CR will not be 5 CR. This may be like 8 CR or maybe 9 CR or maybe 10 CR, depending upon the cost inflation indices. Now, whether I can claim this 70 lakh or this 1.5 CR or both, in my view, yes. 70 lakh, yes. This 1.5 CR, yes. And again, subject to inflation. Now, the question arises, if I claim this particular 70 lakh or this 1.5 CR as benefit, as reduction against rent, whether still it is available? Yes, friends. If I talk about up to financial year 22-23, which is going on as on date, friend, for this financial year, both the benefits are available. Even if you have claimed this 70 lakh or this 1.5 CR as interest benefit against your rent income, against as a self-occupied property, still you can claim this particular interest as part of your cost of the asset. And now this situation is more clear because by budget 2023, the government has proposed a change in the law that in case if you have claimed this interest as benefit against rent, then this interest will not be treated as part of cost. Now it is written in the law itself, if it is claimed as interest benefit. If I have not claimed any interest or part of interest as interest benefit, then obviously I can add that interest as part of the cost. Now it is even more clear. Friends, from financial year 23-24 onwards, the part interest which has not been claimed as an interest benefit can be added to the cost, provided you are maintaining sufficient documents to establish the same. Now, for example, if you are following new tax regime, then in case of self-occupied property, no interest benefit is allowed. Friends, you can add that particular interest to the cost of that particular property for future purposes. Whenever you are going to sell that, definitely you are going to the getting the benefit. Now, this is a settled proposition. So, new tax regime obviously negates the thing on the current date because I'm not able to get the benefit of interest. But this is not a permanent difference. Obviously, I can claim that interest benefit in the future whenever I'm going to sell that property. Obviously, in case you are not planning to sell out in next 5 years or 10 years or 15 years, then obviously this benefit will be postpone. So that is the aspect which is in relation to the old tax regime versus new tax regime. Anything you would like to ask friends in this particular aspect? We are having one more query from Abhishek. Considering taxes, what should we choose for? Buying a new home or renting a home? Abhishek, this particular aspect is there. I think I have in mind if the time permits, but I can tell you in brief at this particular stage only as you have asked the query. Abhishek, it depends on the various factors. Whenever you are planning something and something big, then income tax, I personally believe, is one of the factors. Obviously, it depends on your working factors that you are in into employment or self-employment. It depends. Your family environment, it depends. Like for example, you are into a job and you are having a field job, you have to visit various states or whatever, depending upon 6 months at a time or 8 months at a time. Obviously, you will prefer a rented property. But if you have a job which is stable and in which you have to be at the particular place only in the near future, like 4 years or 5 years down the lane, then obviously you can go for the buying a house. That depends on the various factors. Whether it will lead to saving of taxes or not, that depends upon your income profile. But it depends on the various factors. You want stability or not, you want capital appreciation or not, funds availability, alternative use of the funds. That also matters. Like for example, you have resources that you have a known persons who are ready to pay even 15% per annum interest. Then why should you go for the purchase of a house? Instead, invest that with that particular person. Obviously, you have to see the safety of the funds with that particular person. Then go for the rented one. Now, in buying a new home, then again we have two options: whether to use own funds, assuming I have sufficient funds, or to go for the home loans. Now, it depends. Like if you are having own funds and you have alternative use limited to the investment in fixed deposits. Now, in fixed deposits, you will be earning like 5% or maybe 6%, and that's all. And home loan you will get for 8 or 8.5 or 9%. Obviously, it is not advisable to go for the home loan if you have alternative use of own funds limited to the FD. But you have rate of return that is possible, which may be higher than 11% or 12%. In that case, go for the home loan. You will get the home loan only for 8 to 9%. It depends. There could not be a, like you can say, a blanket straightforward answer whether should go for a new home or renting a home. But a personal advice, not in relation to income tax, at least if you're planning to buy a house, that you can explore that living in that particular area for 6 or 10 months or 1 year on rent, so as to explore each and every aspect about that particular area, whether you're comfortable or not. And then obviously we'll go for buying a new house. It will be a best decision. So that's again the plan and all sort of aspects.
Okay, so
Okay, Vaishnavi,
next
please.
question
Yeah.
I would like to ask is, are these benefits available if loan is taken for repairs and renovations?
Loan for repairs and renovations. Quite interesting.
Yeah.
Repairs. Repairs, maybe day-to-day repairs. Obviously, I do not think so. Someone is going to give the loan. If any one of you know the Vaishnavi, then do let me know. I will
No,
have the
like
day-to-day repair loan also. I'm just a
refinancing.
joke. Yeah, I got your point. I'm just joking. Like for example, like marriage loan is not available. So I think that both are same. Day-to-day repair loan or marriage loan, both are same. No difference in that. So friends, coming to that aspect, whether the interest benefit is available in case of loan taken for repairs or renovation. Friends, please remember, first of all, you have to establish that loan is taken for the purpose of repair or renovation. As per my limited knowledge regarding that finance sector, I do not think so that the banks give you a loan with a heading that it is for repair or renovation. Like for example, home loan, it is clearly written this is nothing but housing loan. But for repair or renovation, you have to go for the personal loan or maybe LAP or whatever. Friends, under income tax law, again, it depends whether the property is let out or property is self-occupied. In case the property is self-occupied, and if you have borrowed funds for repair or renovation, interest is allowed as deduction, but maximum 30,000 in a year. And again, old tax regime. In case of new tax regime, for self-occupied property, no benefit is allowed. Now, in case of let out property, 100% interest is allowed against rent. whether it is new tax regime or old tax regime. It is for repair renovation, no doubt. You have to establish it is for repair renovation. 100% interest is allowed, but principal deduction is not allowed under Section 80C if you have taken loan for repair or renovation. So for repair or renovation, interest deduction is allowed, but in case of self-occupied, it is not advisable if we talk about the income tax perspective. It depends on the fund requirements also.
Okay, so moving ahead, during
Yeah.
pandemic, interest rates went down, and now they have
Okay.
increased. What guidance do you recommend for financial and tax planning?
Vaishnavi, that it is okay coincidence that during the pandemic of the specifically COVID-19, the interest rate goes down and now they are increased a little bit, maybe like 100 basis points or 150 basis points from that period. But I think that is a coincidence because of this is the market factors. It was because of pandemic that interest rates were down. Now the question is that if the interest rates have increased, then what to do? Like if I talk about the from the perspective of income tax, I do not think so. It makes any difference. Like for example, if you are into new regime, then I think you should try to repay the loans as fast as possible. Because in the new tax regime, you are not getting 100% interest benefits. But if you are into old regime, then increased interest rates, obviously outflow is there. But you can repay the loan only if you have the sufficient funds of your own. But at least under the old tax regime, you are getting the interest benefit that reduce your cost of interest. So as such, from the income tax perspective, I do not think so that increase interest rates or reduce interest rates makes any kind of difference. It's a benefit of tax only. So that's my view.
Okay, so does income tax department accept my tax dedication and plannings?
Obviously, no. We all know that how the income tax department works. Whatever you claim, they are going to say no. That we are not okay with that. Now the question arises that how we are going to convince them, and specifically the regime which is going on like faceless regime, that we are not able to see who is the person even if we are explaining each and everything through written documents, through video conferencing. We are not able to see the face of that person. We don't know whether he's able to appreciate or not, whether he's listening or not. That's a particular aspect. And friends, my own experience that I'm explaining through video conferencing each and everything, one-sided video conferencing, and I'm getting as a communication feedback. Okay, yes. Now at the end, I need to ask, okay, sir, are you getting? Okay. Have you completed? Yes, I have completed. Okay, and that's all. So friends, how to convince? Obviously, that income tax law, when you permit the deductions and benefits, the department has to allow, but you have to substantiate with the documents. So for each and every stage, for each and every transaction, friends, documentation is must. This is the era without proper documentation. In case the assessment is there from the income tax department, you will not be able to claim the benefits. Friends, it will be denied. And if we are in a position that we know that we are not a compatible person to maintain the relevant documents, friends, it's better not to claim the deductions or benefits. The reason is that if you are not claiming deduction today, obviously you have to pay the higher tax. Like for example, I'm assuming into 30% bracket, you are claiming deduction or benefits of 10 lakh, so you have to pay 3 lakh extra tax. Okay, that is okay. You are paying 3 lakh. But in case assessment is there and the department denies the benefit, friends, obviously you have to pay this rupees 3 lakh along with the interest 1% per month. In case assessment is there after 5 years, you have to pay 60% interest. Then penalties. If you are not having sufficient documents, friends, penalty could be 200% of your tax liability. On 10 lakh, 300 tax liability is there, so penalty could be 1,50,000 or penalty could be 6 lakh rupees. Now, income tax officer does not agree with the documentation. He has a belief that your documents are not sufficient. You are not able to present your claim. Now, obviously, you will try your best and you will go for the litigations. First of all, assessment. Friends, efforts are required, either of yours or of the professional. In any case, you have to bear the cost of the professionals in that case. And now if you go for the litigations, friends, again, costs are there. You have to engage in most of the cases the professionals. Although the income tax department or the government is working very much harder that you do not require professionals for maximum cases, barring the few. So documentation is must. Let me give you a brief idea that what type of documents we should maintain. Like for example, if I'm taking on a housing loan, if it is from bank, friends, you must have the copy of the agreement, signed copy of that particular agreement you have entered with the bank. Even if case the loan completes, you have disbursed the full amount, even then maintain the photocopy of the same if the original is being asked by the bank. Maintain that particular bank statement of the period in which you have received the bank loan in your bank account and then paid to the builder, or in case it is directly paid by the bank to the builder, then maintain the sufficient documents establishing that this has been paid directly by the bank to the builder. Regarding the interest, you must have interest certificates with you. Regarding the payment of EMIs, whether you have paid or not, you must have relevant bank statements maintained, establishing that EMIs have been paid from this particular bank account. But friends, the thing is that we all are genuine, but there are some persons who play a lot. Like for example, I have taken a bank loan, I have purchased a property for rupees 5 cr. Now I have the sale deed to claim that 5 cr as a cost. I will say that this particular amount has been paid by the bank to the builder or have been paid by me to the builder, and I can claim under the income tax law. Now the question is that whether it is necessary to repay the loan by me only. Friends, wrongdoers do such kind of things. They simply pay the loan from the account of someone else and says that loan have been repaid. And it is very difficult for the income tax department to check like 10 years data or 15 years data whether all of the EMIs have been paid by that particular individual borrower or not. Friends, a particular individual is not required to maintain books of accounts on double entry basis. Otherwise, it could have been established who has paid the loan. So that is the particular aspect. So you have to focus upon the documents. Specifically, if you're letting out the property, you must have agreement in your hand. You must have ready bank statement showing that you have received that particular rent in your bank account. If you are taking on rent a particular property, you are claiming HR exemption, rent agreement, payment receipts, relevant bank statements, PAN card, Aadhaar card copy of the landlord. Every document you must maintain in your files.
That was very important topic, like the knowledge we need for documentation. That's the foremost point, and that has been
Yeah.
covered very well.
Thank you,
So,
ma'am. Thank you.
how can I avail tax benefits from a home loan on under construction property where I'm paying pre-AMI? So, can you
Okay.
just differentiate the tax benefits between ready to move and under construction properties?
Okay, I got your point, Vaishnavi.
Hmm.
And before that, we have a query from a particular person. Can we claim HRA for rent paid to parents? Mr. Ashok, in my opinion, yes. Under our like laws of the India, the parents can ask you to pay the rent. That is their right. That if you want to stay in this house, pay the rent. Why should we allow you to live free? And in case you are paying rent to the parents, friends, in my view, that is a defendable winning case that you can claim that particular rent paid as HRA exemption. But please don't go for the false tax avoidance strategies. Actually, it is required to be paid. Actually, you are paying. The house is in the name of the parents. Parents are not routing that money back to you in terms of bank transfer. Otherwise, it will be like structuring of the transaction. That is not at all advisable. Now, coming to the query of Vaishnavi or maybe one of the participants, tax benefits in case of under construction property. That we have already discussed, friends, like in case of pre-MI interest, that is allowed over the next 5 years after the year of possession. That pre-MI interest you can claim. Regarding the principal deduction, that is allowed only if you are paying that principal after the possession, after the registry of the property in your name. So that is the tax benefit difference or ready to move or under construction. I do not think so any other difference is there. But under construction, obviously, you have to release the money in part You have to wait for 3 to 4 years. These are the different aspects, but not related to income tax. So I do not think so any major kind of difference is there, except we have discussed in the very beginning.
Okay, so if someone has bought two houses for investment purpose and have taken
Okay.
home loan on both, can he claim tax benefits on both the houses?
Yes, that we have already discussed, Vaishnavi, in terms of that particular Excel sheet. I think so. Let me share again that particular Excel sheet and modify the example. Like, for example, this is the case. Okay, I'm having two properties. Now, it is quite possible in this first property also I have borrowed the funds. I have interest on borrowed capital of 1,50,000. Okay, that is quite possible. So, this will be reduced to 1.86. This will be allowed as deduction 6.6 lakh. This will be my loss 4.74. Depends on the old tax versus new, whether I can claim 2 lakh or not here. It depends. So even if you are having, like, I can say 10 properties, you can claim interest deduction for 10 properties. But now coming to the catch. In case of let out property, there is no restriction. 10 properties, all of 10 are let out, you can claim interest deductions. Whatever the interest amount is there, you can claim from the rent. But in case of self-occupied property, in case of self-occupied, first of all, income tax law says only two properties can be treated as self-occupied, maximum two. Like, for example, I am having one property in Delhi, one in Mumbai, one in Kolkata. I am having a field job, my family members live there or whatever, and I am declaring all the three properties to be self-occupied. The law says, sorry, you can treat only two properties to be self-occupied. Third will be treated as deemed to be let out. That it will be assumed that it is let out, and what is the fair rent prevailing in that area will be added to your income. Now, in case of that, those two self-occupied properties both are purchased or acquired through home loans. Can I claim interest benefit? Yes. But maximum how much? 2 lakh. Whether this 2 lakh is for both the properties combined or 2 lakh each, it's combined 2 lakh. It's combined 2 lakh. You will not get benefit of interest deduction of 4 lakh. You will get interest benefit of maximum 2 lakh in case of two self-occupied properties. I think that is the point the participants wants to know that I have shared already. So yes, it is possible. Two houses for investment purpose, no issues in that.
Okay, so any special provisions or exceptions that may be applied for self employed people or entrepreneurs?
Self-employed peoples. Obviously, HR exemption is not there.
Hmm.
Even I believe so. That is a discrimination. Sometimes I think I should challenge this particular aspect with the High Court or Supreme Court under fundamental rights, violation of fundamental rights, right of equality, that you are giving benefits to the employee in terms of HR exemption, and to a great extent, like rent paid minus 10% of salary or 40% of salary. But what about me? And I think considering that only, there is a provision under the income tax law that I can claim rent paid as deduction, like section 80C. That is a section number 80 double C, 80 double G. But that permits maximum 5,000 per month. That means 60,000 per annum. And that is again subject to conditions, that I am not having any house in that particular city. Like, for example, I'm residing in Delhi, so I'm not having any house in my name or my spouse name or my children name, any property, whether it is let out or self-occupied. And further, I do not have any property throughout the world declared to be self-occupied. Then only I can claim that 60,000 per month, and that is the upper limit. It is quite possible that you are getting benefit lower than that. Again, that is subject to some calculations. Friends, in 5,000 per month, I do not think so. Any kind of even one room, or you can say kind of PG with one room and washroom, I do not think so. That is available in 5,000 per month. So for self-employed persons, all other benefits are same except for HRA benefit. For home loan, the income tax law does not differentiate between self-employed or employee. For both the persons, the law is 100% same. Any other query? Okay, that we have a Harsaja's query. Is there anything that our female home buyers must keep in mind or consider before buying the home which might be beneficial for them? Harsaja, first of all, I respect our constitution that gives equal rights to the male and female. Although state government gives the benefit to the female in terms of stamp duty, in my belief that there is a 2% lesser stamp duty as compared to the male buyers. But when we talk about the income tax law, around 10 years back, there used to be a kind of a benefit for the female persons, not in case of property, but in case of slab rates. That there used to be a different slab rates for the female assessees. They have a beneficial tax rates as compared to the male. But as on date, if I talk about from the perspective of income tax law, no difference. The constitution principle, both are equal. They have not given any special kind of privilege in respect of the home loans or income tax law. I do not think so. Even I do not think so. The bank even differentiates between the male buyers or the female buyers. It depends on your CIBIL and each and every aspect.
Okay, so this is kind of my personal question. According to
Okay.
you, at what age or at what stage of your life one should plan buying house? Or what should be the financial status where we can plan buying a home?
Ma'am, first of all, it is your personal question, so that is going to be chargeable with GST, 18%. So that is
Sure.
not going to be free of cost. Okay. You're saying that at what particular age or stage you should buy a house? I'm thinking about the relation with the income tax law, because the income tax guy, I always think about the how income tax is related to particular transaction. For each and every transaction, I used to think about the income tax law. That's my mindset. So I think it's a like financial plan depending upon the various factors. When I'm planning to marry, although I'm married since last more than 10 years, and when I'm planning to marry, I'm just giving a disclaimer so that in case my wife is listening, I may not be in problem. So I'm when I'm planning to marry, when I have like family planning and all sort of aspects, it depends that at what particular age I should start for like buying a house and all sort of aspect. In under income tax law, as such, there is no difference in that. That's all, ma'am. From that perspective, because I'm not able to get anything under the income tax law relating to age factor.
Okay, no issues. So, what are the tax implications if I'm selling a house and purchasing the new house?
Okay, that's the lengthy question and quite interesting one.
Yes.
Selling and purchasing, the two transactions simultaneously. Okay, friends, maximum of us know that regarding section 54, you must have heard that particular aspect that if you're selling a house and from the proceeds of that house, you are buying a new house, there will be no tax implications, but there are some conditions provided under the law which must be fulfilled. There must be some kind of documentation that you have to take care. Let me discuss in brief that particular provision. Okay, let's take a small example that I am selling a house today, 18th of March 2023, with selling price 10 CR minus index cost, परचेज किया प्लस इन्फ्लेशन 4 CR, long term capital gains 6 CR. Now friends, if you do nothing with this particular kind of sale proceeds, you have to pay tax on this 6 CR. Long term 20% tax, depending upon your other incomes and this income. Obviously this is more than 2 CR. There will be surcharge of 15% and there will be 4% cess. So that makes it 23.92%. Now, how can you save the taxes? First of all, you can make investment in bonds. That is governed by section 54 EC of the income tax law. There are some companies specified under that particular section in which you can make investment in the bonds. Please remember the investment must be from primary market, that you have to apply fresh from those companies. And in a generally, if I talk about the practical life, generally in a period of every 3 months, bonds are available for fresh subscription from at least one of the company. You have to make this investment within 6 months. That is by 18th of September 23. That is the last date. Cap maximum 50 lakh. If you are making investment up to 50 lakhs or maybe more than that, whatever the case, in the bonds, that's 50 lakh will be subtracted from this 6 CR and balance capital gain will be 5.5 CR. So first of all, investment mode is available that you can go for bonds. Second, 18th of March 23, 10 CR minus 4 CR is equal to 6 CR. Now you can go for a property. Property could be purchased. That should have been purchased on or after 18th of March 22. That is 1 year before. Or 2 years later. That is by 18th of March 25. That you have a purchase a property within this particular period, then whatever the amount of investment is there, like for example, you have made purchase of property for rupees 5 CR. So this 5 CR will be subtracted from this 6 CR. Your balance long-term capital gains will be 1 CR. That means, friends, now listen carefully. When you are selling this particular property, you are having 10 CR in your pocket or 6 CR in your pocket. Friends, as on date, you are having 10 CR because this 4 CR was incurred around 2 or 5 or 10 years back and not today. But still, as per income tax law, what you have to invest in the new property? Only the capital gain portion and not the sale proceeds. That means I'm liable to pay tax on 1 CR in this example, but still I am having 5 CR in my pocket. This amount which is in my pocket, I can do anything. There is no tax implications at all. So that is the best benefit provided under the income tax law, and this benefit is available under old tax regime as well as new tax regime. Now regarding construction. Construction must be completed on or before 18th of March 26. That is 3 years. Now here you have to take care that if you are booking a particular flat with the builder and builder is giving promise to you in writing, not verbally, in writing, that the possession will be given to you by 18th of March 26. Friends, then only you will be able to claim the benefit under the income tax law. Like for example, you approach builder in the month of 23rd of May 23. So please remember that the builder you are approaching must be promising in writing to give you the possession by 18th of March 26. Then only you will be able to get the benefit under the income tax law. Otherwise, sorry. Now, there could be a delay at this particular date. But if delay is on account of builder, still you will be able to claim the benefit. Otherwise, not. So that you have to take care that you are approaching a proper builder who is planning to complete the construction, and that too within the reasonable time. And the reasonable definition is from the perspective of you and not from the perspective of builder. Like it is quite possible that you are approaching the builder in the month of July 23. Again, you have to take care that the promised possession date is 18th of March 26. If you are selling an old house and buying a new house, this benefit is available by budget 2023 from financial year 23 and 24 onwards. If you are making investment in new house greater than 10 CR, then this investment will be treated as 10 CR only. Like for example, you are selling a whole house for rupees 20 CR in which you are having capital gains of 12 CR. Now you are buying a new property for 12 CR. Now up to 31st of March 23, your capital gains will be nil because you have capital gains of 12 CR, investment is of 12 CR, balance is nil. But if you are having these kind of transactions in on or after 1st of April 23, then the 2 CR will be taxable. 2 CR will be taxable. So that you have to take care. If you're planning something big, then that you have to take care.
Okay, so last and important question. What are the major pitfalls or mistakes that people commonly make when trying to maximize their home loan tax benefits, and how we can avoid them?
Okay, the mistakes. So first of all, again, I will repeat that the proper documentation. Without documentation, friends, sorry, If you are claiming the benefits, in case assessment is there, you will be in problem. So always assume when you are entering into financial transaction that your case will be under assessment, under scrutiny by the income tax department, and what could they ask, you have to maintain today. So first of all, that is the common mistake that I'm seeing in the market, that proper documentation is not there. Another thing by which we can discuss one particular tax planning aspect also, that buying the property in joint name, and what we have to like take care in that particular aspect, because I've seen many mistakes in that particular aspect that we are going to little bit later. And friend, the last and the foremost in respect of mistakes or pitfalls, that you have to take care that you are filling the income tax return form properly. Entering the amounts in wrong columns leads you to the litigation issues. So that you have to take care that your income tax return is being filled properly after checking form number 26AS, after checking annual information summary or tax information summary. Everything you should check before filling the return of income. Cautiously. Friends, everything is linked. Every information is with the income tax department as on date, and that you have to take care. Coming to that joint property aspect, what are the benefits if we go by the joint property first of all, and whether we should go for or not, if you're going for that particular aspect, whether any kind of benefit is available or not. Joint. Generally, husband and wife or father and son. That is the maximum cases. Like it depends on you whether you want to purchase the property in the joint name with the fiancé or not. It's again your choice. I'm not going beyond that. So friends, first of all, you have to remember that in case of joint property, interest let out, no problem. Reason being, it is allowed without any limit, no problem whether it is being claimed by a husband or wife or both, whatever, in case of self-occupied property. This 2 lakh limit is for both. Indirectly, you can claim 4 lakh interest benefit. That is one of the major reason that the people go for the joint ownership, that 4 lakh interest is allowed. Second reason, that in case of female buyers, stamp duty is comparatively lower. Similarly, in case of father and son, same situation will hold good. But in case of husband and wife, what you have to take care? Friends, ultimately, the funds must be of both the persons. Like, for example, it is quite possible that husband is paying the whole money, down payment, bank loans repayment, and wife is paying nothing. You can buy property in the joint name, no issues. But under the income tax law, this 100% property belongs to husband and 0% belongs to wife. 0% belongs to wife. So if you're buying property in the joint name along with your spouse, considering the income tax benefits, then you have to take care that the funds are also arranged by that particular spouse also. If you are making 100% payment, I'm really sorry, you will get the 100% payment benefit and not your spouse. And in case you are getting the benefit only and not your spouse, the benefit will be restricted to 2 lakh only. Now, in case, for example, husband and wife both are arranging the funds, both are into earning, both are doing job, good handsome amount each and everything. But under income tax law, you may need to establish that amounts are paid by spouse also. Friends, it's highly advisable that you open a bank account, a new bank account with joint B category, that is either or survivor. Now, whenever you have to pay bank loan EMI, you have to pay to builder, route every transaction from this bank account. You both infuse funds in this bank account from your personal bank accounts. And in this bank account, try to have only transactions in relation to your house property and no other transaction, so that it can be established without any doubt to any person that we have purchased the property in joint name. We have made the payment equivalent to 50-50. It is not 60-40. It is not 70-30. Friends, it's not a like cumbersome exercise that you're opening a new bank account, joint be infusing funds. For the sake of very small simplicities in life, we create problem for ourselves. We create problem for ourselves. Friends, giving a small example, although not in relation to the home loan, the huge problem created by a person. Friends, there was a partnership firm with name Messrs ABC. In financial year 15-16, one partner died. The another partner continued the business. Same name, Messrs ABC. They had the settlement with the legal heirs of the first partner. They made the payment to them, but did not create any kind of document. Friends, even this particular partner think of that I'm taking the same name. I will continue the same bank account also. But in the bank account, they ignored updation of documents. Updation of documents. Now, in the bank account, every year, because of business, there are cash deposits of approximate 5 CR. Now, the bank reported this cash deposit to the income tax department under the PAN of firm for financial year 16-17, 17-18, 18-19, and so on. But friends, obviously the firm does not exist. Partnership firm is no more because no partner is there. One partner is there. And friends, firm did not file any ITR at all. Now, getting this information, the income tax department got alert. They went for assessment of this particular partnership firm, and in faceless manner, the assessee was not able to substantiate this particular aspect, that this particular 5 star is part of Messrs ABC, that is nothing but part of this partner. Friend, the assessing officer added this 5 CR as income. And friends, as on date, if you are not able to explain any kind of receipt, tax rate is 78% plus interest. When that particular person has received demand of 8.3 CR for 1 year, that person has approached me for the purpose of appeal with the higher level litigations. So friends, very small mistake that on conversion of this partnership firm into sole proprietorship, they did not updated the documents with the bank, and that resulted into problem for them. Friend, this is for 1 year, 2 years are pending with the income tax department, and I am very sure that for the other 2 years there will be the same result only. That under the faceless, that income tax officer is not going to accept your contention that this bank account is part of that sole proprietors, not part of firm. So that is the, you can say that you have to be vigilant for each and every financial transaction you are making.
Okay, so I
Anything?
guess all the questions are answered. Any viewers have any doubts can ask on comment section. So just wait.
Yep.
So I guess we have covered almost everything.
Okay.
And thanks a lot, sir, for an interesting session and being our guide here today.
Thank you,
Uh,
ma'am. And okay, please carry on, please. Sorry.
yeah, so if any questions which has not been covered, you can, all the viewers can comment down on our YouTube video. And please stay tuned for many more upcoming webinars with interesting topics. Also, don't forget to follow us on social media accounts of Facebook, Instagram, and Twitter. LinkedIn also. You can also subscribe and rewatch our webinar editions on YouTube channel of Home Capital.
Okay, friends, would like to thanks first of all the Home Capital for providing this particular platform to interact with you, and would like to thanks to Vaishnavi personally for asking these questions specifically in the lucid manner, so that I'm able to appreciate what she want to ask, and the participants. Really appreciating that you're quite interactive, you're continuously listening and asking the questions. Thank you, friends. Thank you very much.
Thank you.